What's going on, guys? Welcome back to my channel. This is Blood Phantom 81. In this video, I'm going to be talking about dividend growth. It's definitely been a while since I've touched upon this subject. The reason why I'm talking about this is because a lot of times people say it's hard to find deals in this market, and to be honest, I don't really disagree with that statement. Sometimes it is pretty discouraging to try to buy something that's near its all-time highs, and with where the S&P 500 and Dow Jones and Nasdaq are, then that's pretty much the case for a lot of stocks. However, I did find a couple of stocks that I'm excited about. I'm not necessarily buying these right now, but that's not because I don't want to necessarily. It's just that I'm using a lot of my money towards a down payment on the house and other costs associated with that. And also on my main account, which is Robinhood, I actually don't tend to buy dividend growth stocks there. That's mostly for swing trading, technical analysis, and just growth in general. But I do have an M1 Finance Pi, which is actually dedicated to simply dividend growth stocks. You see it on the screen right here. It's actually called Phantom. Obviously, you know why it's called Phantom. And so in this Pi, I basically invest in high quality dividend growth blue chip stocks. I do plan on releasing a series which goes over each of these holdings and basically my strategy with dividend growth and where I see it in my long-term retirement plan. But until then, I may show snippets of it here and there. So without further ado, the first stock I want to talk about is actually McCormick. So with McCormick, just like any other stock that I talk about, of course, I'm going to start with the technicals. And where I see it right now is we're retesting the 200-week moving average, which is actually one of my favorite moving averages for long-term timeframes. And the fact that we're retesting it makes me love this even more. Now, it is super, super tempting to just try to sneak in a little bit of money here, but the truth is, I'm honestly strapped for cash until I get paid, until this whole house thing settles. So, I don't know. We'll see. Hopefully, it's still in the same place, in a couple weeks from now. But yeah, essentially, this is McCormick's price history ever since 2013, 2012. As you guys can see, we really only had two retests of the 200-week moving average, and this one was obviously because of the March 2020 crash when everything was crashing down. And now we're actually back here, and so let's go ahead and see just how large of a retracement this is. So it's about a 50% retracement from the low to the high, where we hit about $104 per share, and now we're currently at about $80 per share. So that is a drawdown of about 22%, and from the low it was about 25%, right? And so the thing is, you might be thinking, oh, dividend growth stocks, they just they just stay on discount, right? Like they don't really move that much. Wrong. Dividend growth stocks actually move very quickly if you think about them the right way. Like I remember buying McDonald's here, not really realizing that like this was going to be one of the last dips that I see for a while, right? Look how quickly we recovered. And probably the most significant dip that I've seen in a while was actually Costco. So super randomly, a year after the March 2020 crash, Costco actually plummeted from about $392 per share all the way to about $308 per share. And that's a drawdown of about 20%. I actually did make sure to go heavy in Costco. Again, not realizing that this was going to be one of the last opportunities in a while. And so, honestly, this tends to happen with a lot of stocks. I don't want to keep on showing more examples because you guys probably get the point. But in my opinion, McCormick is no exception. And so, in case you guys don't know what McCormick is, I mean, obviously, I think you should by now. But what McCormick is actually the world leader in spices. And you guys might be wondering, okay, world leader in spices. Now, how do they grow? They actually are going to grow through two vehicles, two avenues. The first is through company acquisition, and the second is through growth markets, such as emerging markets. And so we are actually approaching the 1 year anniversary of the time where McCormick actually purchased Cholula, which is a hot sauce, right? It's the leading Mexican hot sauce. And so a year before this, they actually purchased Frank's Red Hot. So Frank's Red Hot in about, I think, October of 2019 or something like that. And not to mention, they also purchased French's. And so they are very aggressive with their acquisitions. Let's go ahead and take a look at some of their brands. So this is actually McCormick's brands. I filtered by the Americas because otherwise we may not recognize some of the other spices. But this is just a really quick glimpse of some of the brands that they own. Obviously, Cholula after November 2020, they purchased them. Frank's Red Hot, French's, Lori's, McCormick, Kitchen Basics. Obviously, anything that has to do with McCormick is obviously owned by McCormick. Old Bay seasonings, which is super, super popular. Simply Asia, and then Simply Asia is also related to this, which is Thai Kitchen. And so this is just a really quick snapshot of some of the brands that McCormick actually owns. And of course, these are sold in stores all across the United States. And the theme with a lot of dividend growth stocks, especially these types of stocks that are just so massive and so successful, is that because they're so popular, they really tend to win pricing wars when it comes to retailers. And so they already have this network of relationships with retailers. And in order for another brand to come in and be on the shelf instead of a McCormick brand, it's just not going to happen, in my honest opinion. And so until that's not no longer the case, I think these types of consumer staples are going to continue to destroy their competition. So what I also want to talk about is their dividend growth. And so this is how fast they're actually growing their dividend. So in 2016, they paid about 88 cents per share. And then here in 2020, they're paying about $1.27 per share. So that's about a 50% increase in about 5 years, which is actually expected because this right here is their payout growth. And what we see is that it's consistently above 7%, sometimes 8%, sometimes 9%, and then sometimes in the double digits. The reason why it's negative is because it's counting everything in 2021 so far. And so once they actually pay out their dividend in Q4 2021, then of course this is going to normalize. It should be around 9 or 10% again. And so this is a snapshot again of the last decade of dividend increases. And it's just so hard to not get excited about this. And the next company I want to talk about is Clorox. So again, let's go ahead and take a look at them from a technical analysis perspective. So they've actually broken below the 200-week moving average, which is fine. We actually did that here in April 2018. It's okay to overshoot a moving average. And I'm not saying we're going to bottom soon, but I do think there is going to be a lot of demand for this stock right here below the 200-week moving average. And so the size of the drawdown seems pretty massive, but it mostly has to do with how big the run-up was here at the end of 2019. And so this is a drawdown of about 32%, and then all the way down to the low, it's about 34, 35%. Now, you guys might be wondering, okay, why do I care about Clorox if it's only at the same price it was in 2019 and early 2020? And so the way that I see it is that we already know that Clorox can hit these prices, right? And this is almost like a philosophical discussion about drawdowns. It's like, why should I get excited about a drawdown just because, we draw down from a really large rally? Now, I don't want to get into that discussion right now, but this is almost like we have a time machine, right? If you guys missed the opportunity to get into Clorox and you saw Clorox just run up, run up, run up, run up, this is your chance to actually get in again. Again, this is not financial advice. I would be buying this one if I could. And maybe in my next 2 paychecks, I'll start accumulating some of these Clorox and McCormick. But I mean, it's just, again, it's just so hard to not get excited about this. And so currently at 161 per share, and at the peak, it was about $240 per share. So definitely on my radar. Now, you guys already know what Clorox is, but just to show some more quick facts. So some of the reasons why they're so dominant is because they're in over 100 different markets, annual revenue in excess of $6 billion, which is totally untouchable in my opinion. And these are some of their brands. So we obviously know about their cleaning brands like Clorox and Pine Sol, but we don't know generally about Kingsford Charcoal, Hidden Valley Ranch, Brita, Burt's Bees, etc. Now, this is great, but what makes this even better? Now, 80% of their global portfolio is from number 1 and number 2 share brands. And so they have several billion-dollar brands. And again, the same thing with McCormick. They have the networks, they have the distribution, they have the infrastructure. There's no way other brands are going to be able to compete with them in terms of shelf space. And so, yeah, I definitely don't want to mess with Clorox, so I'm going to join them. Now, I would say Clorox is a little bit more volatile as far as the actual dividend payout growth. So some years we do have some really great surprises, right? 2018, we saw 13% increase. 2019 and 2020 were also really solid at 8 and 7% respectively. But then there was a stretch for about 3 years where, the increase was only 4%, 4%, and 4%. And then until then, we had these really strong years, and then around the recession, actually, Clorox just crushed it, right? 20% two years in a row, and 11% the year after that. And so I wouldn't necessarily be relying on this one for the dividend growth. It's not as consistent as McCormick. However, what you are getting in return is the fact that with this current price level, Clorox is paying about 2.87%, which is really hard to beat. I think 3% is like the holy grail of dividend growth stocks if they actually grow out their dividend. And at the rate that Clorox is at about 7.6%, I think this is honestly like pretty close to a home run. And then dividend growth of about 44 years. So again, more stocks to get excited about. Just some ideas. These are both multi-billion dollar market cap companies that bring in billions of dollars in revenue. They're both dividend aristocrats. Probably going to be dividend kings, in my honest opinion. And I don't really see that changing. Almost like trains that are going towards their path. Everybody knows which way they're going, and you can't really stop it. So, yeah, just wanted to give some ideas. It's almost like I'm living vicariously through people. If I can't buy these, it'd be nice to know that other people are actually enjoying some of these discounts, and basically helping fund their retirement or whatever you guys do dividend growth for. If you don't do it, maybe it still gives you some ideas. So that's gonna wrap it up. Thank you guys for watching, and I'll catch you guys in the next one.